All right, all right. Good morning, good morning. It is 6:31. It is January 4th. It is Thursday. So what is that? Tuesday, Wednesday, Thursday. Third trading day of 2024. My name is Scott Ruther. I'm the Chief Strategic Officer at TeeToLive.com. This is the 6:30 Club where we go over, the narratives, what's developing, the keys to the day, how to make some active cash flow, how to situate yourself on an intermediate time frame, maybe long-term time frame. So this way you could retire comfortably in the mountains or in the ocean. Maybe send your kids to college, so you have money on a 529 plan. You don't have to borrow money and then beg for the government to give you relief that you probably shouldn't have borrowed. But anyway, how's everybody doing today? All right, so here we are. Listen to a little Pearl Jam radio, getting my routine going. Cheers. A little iced coffee in the morning. I've already been in the sauna. I've been in the ice barrel. Did some of my work around the world, checking out what's happening on a macroeconomic basis. Europe's trying to bounce a little bit. Asia still no real flows geopolitically. There's definitely still a lot going on where oil is getting bounced probably because of it. Big Hamas leader was killed in Lebanon, which is great. But in Lebanon, you do that, it's a little tricky. Another Apple downgrade. I guess everyone's a little worried about the PE, which, after the stock makes an all-time high, I guess, it has to come in a little bit, and that's an excuse. Either which way, let's get the day going. So I'm starting to see, remember I told you, everyone says, so goes January, so goes the year. We just had basically the Santa Claus rally, and it's supposed to be a very bullish time, but it didn't happen this year. So what does that mean? Well, I particularly don't think it means much this year, considering, look at the chart of the S&P cash. We were at 4,100 in October. We took back the 8-day November 1st. So November 1st was when this active sequence started. November 1st is when active guys like me that try and get paid monthly or quarterly switch gears from tactical, meaning not a lot of money work, to a portfolio approach with things that are working. Chart patterns are breaking out using our tier system, and PS from 4,100, all the way to 4,793. Now that is a big move, okay? So basically we had to come in all the way down first from summer to do that. So where did we really go? If you think about it, not too far. Or if you go over 2 years, we still just went back to where we were, but overall from October to here, that was a big move. So the 7-day Christmas move was really muted. So anyway, what did we do? We broke the 8-day, we came into the 21-day. So we pulled in 93 handles, not the biggest pull-in. The street based this the last pull-in on the fact that the Fed pivoted. Yes, the Fed pivoted, said they're not going to raise anymore, but then all of a sudden, street said they're going to cut 5 times. 1, 2, 3, 4, 5. How are they going to cut 5 times when the economic news is decent and the S&P is trading at a weekly, monthly high? Just doesn't make sense. They had a 100% rate cut. So anyway, so that's what brought the rates from 3.7% back to almost 4 to to say, oh, street got a little ahead of itself. So now maybe we pull in a little bit, and if all of a sudden we still continue to have a weaker month, maybe down towards 4,600, which would be the 50-day, which would be a retest of this double top that will turn into a good spot maybe after a move from 47.93 to here. That's when maybe they could then cut for March, and then we start a new rally. Part of my report that a lot of you get, I said I think we can get to 51, 5,200 this year, but I had no idea what's going to happen in January and February. Was are people going to take profits finally in the first few days on big winners and pay taxes in 2025 because they didn't want to do it in December because they didn't want to pay in April? With some of these January effect names continue to go, not a lot of them did, but a few did, Pfizer and some other ones, and who knows, maybe we get a little bit more. Bottom line is, the first few days were a little tricky and they were to the downside. And sometimes it's just so easy to see, which made sense. And meanwhile, I got a little beat up the first day of the year, made some money yesterday. So now I have a little less risk out there. I'm going to watch the way this, things develop. And sometimes the first 5 days, the character change day in, day out. So anyway, some people are like, hey, Red Dog, what do you see here? I'm like, well, I put the chart pattern candlestick, little cheat sheet out there every weekend consistently for you guys to be able to see candles and know what they mean. So anyway, there are two charts patterns that happen, right? Here was a little topping tail above 47.78. Then you had a bit of a false breakout. So if you look closely there, you can go to one of those sheets and look what a topping tail looks like. And it was small and narrow as well. And then, you see how we went below this on that Friday prior to the last day of the year that, basically broke this ascending channel that we were riding. So look at the sheet, ascending channel and topping tail, and boom. So now what? Sometimes my naked eye, could see a pattern maybe develop. So what I'm kind of thinking, this is just a thought. Red Dog has some visions. I've been doing this for 25, 26 years. They say, what kind of intuition do traders get from all this seat time? I've been in the seat for a long time. I'm actually in the dark. You want to see Red Dog in the light? Oh, anyway, this could be a head and shoulders pattern developing where this is your left shoulder. Here's a mini head. And then we might get some kind of bounce to then create a right shoulder. Okay, so maybe we want to go back up to 47.54 because we did hit minus 30. We were plus 60. That's a big oscillator, high. And then so maybe with the jobs report coming Friday, this and that, maybe we try and muster some kind of bounce. And if it gets rejected into 47.54 area and rolls over, you then have a neckline here, okay, and then perhaps this short-term head and shoulders top pattern would break, and then that gives you your move to 4,600, which then could be a great spot to rally from. I'm just thinking ahead, so don't be getting all bullish if we're back at 47.54. It might just be the right shoulder of a head and shoulders pattern. But then sometimes you get there, you hang out there, and then it busts through, and then it negates that pattern. I'm just it's sometimes good just to think about if this, then that, so you could kind of think ahead so you could be, a little proactive in anticipating, spots to stall, spots to buy, etc. Right now, anyway, we might not even get there, but I'm just saying that could happen. And at this point, you go to the weekly chart of the S&P cash, and everyone's like, Red Dog, is this a double top, a major double top? I'm like, well, you have 48.18, that's the all-time high, which we didn't get back to. Like I said before, we're in the same spot we were 2 years ago. So although these massive gains happened last year, they happened because we closed on the dead lows heading into last year. So if you, on an intermediate long-term level, remember Red Dog, personal, which is what I do for the long term. If you put money every single month in during this corrective phase, your average cost is awesome. For the long term, it doesn't matter. I'm 51. I'm not going to cash it in. I have 9 more years, but chances are in 9 years, the S&P probably will be at 7,500. 529 also. My son's in. Remember, I told you got started at age 5, so started a lot lower. Start your 529 when your kid's 1, because I had to play catch up because I started when he was 5. Thank goodness during the pandemic. Well, actually, the taper tantrum, I went from 500 to 750, and then during this, I went to 1,000. So I put 1,000 a month, and I still might not have enough. For college, even though he's a pretty damn good basketball player, dropped 30 points last week, and he's got a game today and tomorrow. But anyway, if he gets a scholarship, that'll be his house money. Anyway, you look where we are here, boom, you still look where the 8 days we've been above during this entire weekly trend, and even during some of these crazy trends, you come back and test it. So if we came in and tested this would be a little bit above that 46.07. All in all, everyone's like, so, oh my God, look how crazy and damaging, this first rally has been. And actively it hurt if you were too long. Like I lost money the first day, but bottom line is, we just broke this little spot here, and we came into some support, and now really there's a void here if it wants to. Look where we came from, like I showed you before. So let's just put it in perspective. Perspective is key in life and in trading and in everything that you do. So with that being said, what has changed a little bit? Well, I talked to you guys about the XLE. XLE, which has been in the 2-year range, pretty much when everyone got really bullish up here, in October, we broke that higher level, and then we came right back into this range. And I talked about some flows for the new year, maybe, some things, just anyway, I didn't do it, but some of the Alpha team bought $86 calls out to January 12th because I'm like, oil and gas companies, they're just so damn choppy. If you want to have some exposure, either be long versus 83, which is the gap, right? Just like a pro earnings gap play we do tactically, this, the XLE did gap above this spot, took back to moving averages, so that was your risk defined. And now it's poking its head up, and there's another energy deal out there today, which I'm sure you'll hear about it. So maybe it continues to trend. So that was good. Money went to Lilly. This was a great, we actually put this on as a power play, which is one of our products where we tell you what to do, and I actually bought it also. It was very choppy for consolidation period. This was pretty much since October it's been consolidating, that huge move. And although I don't believe in it, I'd rather you sweat it out in the sun and go for a run in the mountains or go in your ice barrel. Some people take pills to lose weight. Not judging you. But anyway, big 2-day move. That was awesome. What's it doing this morning? A little bit more follow through. Isn't that nice? When it, I also do the day one, sometimes leads to a day two. It's part of the T3 Live tactical courses that we take, or some cheat sheets. Well, it's great when a day one leads to a day two, and then on day three, though, you're trimming and you're reducing, you're not adding. Anyway, nice move, nice follow through. But in tech, it didn't happen. Listen, look how this range triggered to the upside. I'm not going to give you just the winners and not the losers. NVIDIA hurt. NVIDIA, I thought maybe to start the new year there would be some flows. It would break out. For 6 months, it's been in this range, and it didn't happen. Just didn't happen. Here's this is where we were in July. This was the whole entire 6 months of everybody talking on how awesome NVIDIA is. But meanwhile, it was awesome from here. This whole consolidation phase was definitely not the easiest looking for follow-up. You had some plays there. You had a short right here when it failed at the upper end, right? It lost the 8, they came in. Then you had a descending channel here, descending channels, ascending channels if you're just day trading, broke to the upside, and then this candle said, Then you had your red dog reversal here when everyone thought it was over. I think Kramer was the most bearish on this move. So there was tactical things to do here. There just wasn't some big awesome moves, and I thought maybe coming into the new year we'd break above 499 or 504, and it didn't happen. So I took off that call spread. I lost a bunch in it, and now I'm just going to see, what happens here for a little while. Do we rebuild in here and then maybe go after earnings, or are we coming back to here? I don't know. One of the problems to start for tech was Apple. Apple was a laggard in the end of December, or not a laggard, just out of play, and then all of a sudden it became a headwind. So they started selling other tech, because if the best company in the world, which I do believe Apple is, all of a sudden has a hole in the chart and lost the 8-day and 21-day, chances are, no one's going to be super excited about tech, especially after a 45% move last year. So it was downgraded, actually. Look at the difference between Lilly and this, stock specific. Anyway, it was downgrade 182.79. This low here was what? So Apple right now is opening below 183.43. So does Apple reclaim that level and reduce some pressure, or does it stay below, and does it want to work its way to 178, which is the 200-day, which was the spot that we actually made good money on Apple when it broke this another descending channel. See, chart patterns work. That's what we teach here at T3. Chart patterns, so you could actively approach the market and make a living besides everything else you do. So anyway, 178-ish. Big hole there. So again, if Apple's working its way lower, chances are it's hard to buy strength in Microsoft or Amazon or Google, even though they're different companies. It's just the way it is with the flows. Microsoft still looks okay, but you're talking about this channel here where there's no momentum. Like, we're momentum traders. I love to buy high and sell higher. That's the best way to happen, but it doesn't happen often. Sometimes you have to play the ranges, and it's not a lot of fun. But anyway, 366 is a spot, and then here's 362. And at some point, if the market wants to get going, I would think Microsoft's a good candidate for a move. In order to get back to 384, what do you have to get above? 377 and 373. Points of reference. Anyway, that looks decent overall. Amazon, looks like it's heading towards this 50-day also. It broke this triangle, right? My son, unfortunately, is now having a little hard time with geometry. So, I've been trying to teach him chart patterns. Anyway, triangles are easy, and this one broke to the downside. So we'll see what's next. So here we are. You have Tesla, which was a problem all of last year, a laggard all of last year. was really weak yesterday. It's bouncing a little bit. Some people will probably try and fade this bounce, but after the red dog reversal bearish, engulfing candle, look what that led to. Why don't you go to one of those cheat sheets that I send you guys every week and I say, take that 8 minutes, this can make you money. This candle said, you're not supposed to be long. And if you're a good short, maybe you made money. I remember the next day it opened up and then broke this level, and here we go. So anyway, this was back here. That was different. That was a different day, almost the opposite of that day. Doesn't look so easy when you go through it. That's why I get mad at some people on TV. They make it like it's so easy, right? They're the smartest people alive, but meanwhile, they talk for a living, which is what people do. You guys are trading for a living. You probably don't have a big salary. You make your monthly money. You're stressed. That's why I always preach. You have to friggin' have your routine and you're just what you do, so you can think clearly and execute. And if you're in a rut, it's a tough game. You can make a lot of money, but you could also feel like you're not going to make it. So those are two extremes. So that means you have to find that happy medium, which is what I need to do every day too, and I try and help you guys do that. So with that said, Tesla's up a little bit this morning. I guess we'll see if the strength gets sold and it rolls down. But again, it just came in for 4 days, so sometimes you go back to the well, and the well, hey, there's no water in there this time because you drank it all. So try not to go back to it. So we'll see. Other than that, I have like 35 charts to do for the Alpha team for Regular All Access, and hopefully you're started the year on the right foot. And if you don't, use your resources. I know Amber and Monica and all the the T3 Live consultants had a lot of great deals for this year for the Alpha team and for Regular All Access. If you've been following me since I started this in the pandemic, great. I appreciate you. Hopefully you did well, and I helped get your mind right. But really, if you trade for a living, we have great products that can help you. And if you don't, and you just want to know what's happening and make some moves in your E-Trade account or your Schwab account, whatever it is, that's cool. Do what you got to do. Everyone's different. And, I just hope you're doing well. And thanks for tuning in. Going to try and change things up a little bit. I don't love Twitter right now. I don't love the bots. I don't love the. How many of you guys are getting the like these porn bots now that are like sending you naked pictures of themselves and it's like canceled? Or they're telling you, that they're attaching to a tweet saying, hey, I just turned $2,000 into $240,000 in an hour. Don't believe that. No, I'm kidding. But some of them are like, oh, this guy's the best person in the world. I gave him $10,000 and now it's $24,000. Chances are, that's a scam. You're going to give this person $5,000 and they're going to tell you how much they're making, and then you're going to want your money back, and they're going to leave to, they're probably already in a different country. But anyway, don't fall for any of that stuff. So I'm going to try and get on TikTok a little bit more, Instagram a little bit more. I'm going to have my brilliant tech team come here and figure out how I can get this broadcasted. Besides YouTube, we're on YouTube. I have my YouTube channel now, so you should go to the YouTube channel, Red Dog T3. I believe that's what it is. And I want to try and spice it up and make life a lot more fun and more profitable, right? My mantra for this year was 2024: make money and memories, but the money's not important if you don't make the memories. With that said, good luck today. Tomorrow's a jobs report, so know what you can handle and know your time frame. Let's see what we got landing here. So now I'm going to listen to music and do about 35 charts and just chill out.